Hi, my name is Alan Porter. My company is Strategic Wealth Strategies. What I want to show you today in this segment is a strategy that I call the Mortgage Master. The strategies I've learned in the last 4 years, I've saved myself and my clients hundreds of thousands of tax dollars that they didn't have to pay when they were paying before. But what I'm doing is I'm educating my clients on the financial strategies the financial institutions have been using against us for years. This particular one I call the Mortgage Master strategy. So I'll show you what I did on my house alone. My current balance on my mortgage is $270,000. The principal and interest payment at 3.375% interest is $2,158. Now my new balance with the closing cost of approximately $3,000 will be $273,000. Again, my present house payment with the principal and interest at 3.375 is $2,158. It was a 15-year mortgage. I still have 11 years and 8 months left on it. Now, I've had a mortgage company for several years, and I was like the vast majority of people, thinking that a 15-year mortgage was better than a 30-year mortgage because of the interest that you would save. But I found that not to be true. When I found out the strategies in this, because of the software and stuff, I have to prove that. Now, what I have is a new house payment, interest only, of $400 a month. That rate is 1.75%. Like I said, it's interest only. I financed an index universal insurance policy with a $1,750 left from my payment, from my principal and interest right here. I got $8 less. So something that's very, very important, the immediate death benefit is $284,620. So if something would happen to me, my wife can live in a house, the house will be paid for, and she'll have over $11,000 extra in cash. Now the cash value in the policy at year 11 is $282,276. Now I can take and pay the loan off early if I so choose, saving over $17,264 because I'm paying it off 8 months early, plus the $9,276 in extra cash. That is that figure minus the figure from the $273,000. But that's not what I'm going to do. I'm not going to do that because I'm going to do a financial vehicle that I don't do anymore, but I know the benefits of it. It's called a reverse mortgage. And it's probably one of the finest financial vehicles out there, especially for people my age and older. You've got to be 62 years old to benefit from this, but there's so many people out there in retirement that are house rich and cash poor. But they're uneducated about the reverse mortgage. The reverse mortgage, you can live in your house for the rest of your life. All you have to do is pay the taxes and insurance and upkeep on your house. You're going to do that anyway. A perfect example, I had a gentleman down in Myrtle Beach. He owed $900,000 in his house. He's 6 months behind his payment. The balance, his house value was $900,000. He only owed $200,000. And he's 6 months behind. They're going to evict him from his house. He did a reverse mortgage. His credit was terrible. You don't have to have credit to do a reverse mortgage. His house now is being paid off by the reverse mortgage. They give him a couple $100,000 in cash, and him and his wife can live in that house for the rest of their lives and don't have to worry about not having a place to live. Again, people think they're going to lose title to their house. You do not lose title to the house. You have title. If my wife and I live to be 100 years old and the mortgage, our reverse mortgage is worth more than the value of our house, this is one of the great things about it. It's called a non-recourse loan. The bank takes the hit. But if we die when we're 75 and there's plenty of equity in the house, then they sell the house and whatever's left goes to our beneficiaries. It's one of these things I like to educate my clients on because it can make a huge financial difference in their lives. But let's transition back to my computer screen right now. Now, something else I want you to understand, that my death benefit, it's tax-free, is $284,620, but it grows to $550,003 over a 11-year period. The thing is, when I do my reverse mortgage, I can start taking policy loans out of $35,389. These are tax-free. They're tax-free because it's in accordance with Internal Revenue Service Codes 7702 and 70E. And people, I want you to understand, at a 30% tax bracket, and people say, well, I'm not a 30%, I'm a 25 or a 20, but you understand the state taxes in North Carolina, I believe, are like 7.25%. So I'm in a 30% tax bracket, and it's probably going to go up without a doubt. That's the same as having $50,555. All I'm doing is making my money work for me in two different ways using financial strategies that I educate my clients on. My strategy is also backed up by the Federal Reserve Bank of Chicago in a 58-page report with one large exception. They do not finance an index universal policy with all of its benefits. They only pay off the loan earlier by paying the principal directed to the loan balance, but still do an interest-only payment. In conclusion, this is just one of the strategies that I teach my clients. This is a strategy I've done in my house. I've done it on several of my clients. The immense value that it has given my family by adding to my estate value, it's in the hundreds of thousands of dollars. If you ever have any questions about this, please give me a call. And my number is 910-551-1046. Again, my name's Alan Porter with Strategic Wealth Strategies.